Hi everybody, it's Nick McDonald here from Trade with Precision. Welcome to the last update for the 2010 year. We're looking at the Russell 2000 index here and deciding where that might head in the coming week in the lead up into Christmas. So we've got about 5 days of trading left, and let's have a look at the charts to see what is the most likely thing to happen. Starting from the monthly chart, still continuing the strong uptrend, being a similar case now for a good few months, but pushing on up and not showing any resistance in the way up until around 800. So we've got a good run up until we hit any resistance at all. However, it is looking overextended, and my overextended measure, the distance from the averages, is getting further and further and further. The further this goes up, the more overextended it's starting to look. And then we come down to a weekly chart just to see where might we find some resistance. And we identified the same level last week. This is 780. Now when we look at a daily chart, we'll see we did have a bit of a turnaround at this level just last week. And we've got to really see now as we come up and test it again whether we can get through it. But certainly it's 780 up to 800. 800 being identified on the monthly, but also looking significant here on the weekly. And the 780 to 800 level being the key areas of, are we going to break through that? That's of course the question for this week. Now coming to the daily chart, last week what we saw was a bit of a pullback. So we came up to the 780 like expected, had a bit of a pullback there, but now we're pushing on up again, and this in fact does look very, very bullish for the next test. It looks very bullish because of this pattern. I love this pattern of pulls back into the averages, small green bar, then the next bar breaks up through the high. So here this candle here, nice and small and green, very bullish, and then we break up through the high of that candle to confirm bullishness. Now that means though we're looking very bullish on that, we've pulled back into the averages and looking strong for a continuation up. The big thing is that the big question mark is, well, we do have resistance. We're in that zone 780 to 800 and we're close to that now. Are we going to push through it? Let's just pop down a time frame before we look at some of the other indices. And here's a 4-hour chart, and I come here just to look at the detail and look at how price has been heading up, failing, heading up, failing, heading up, failing. And even here on these last couple of candles, the last 8 hours of last week, we're still failing to get up and close just above 776. This is kind of intraday support, but very close. When I say 780, I'm always talking a zone, and we're up around that zone and we're failing. This also, however, provides good opportunities to enter on breaks of such strong resistance. We're in a consolidation here. We've got a very nice, flat, defined upper level, and if we break up through that, it can create good opportunities. So let's have a quick look at the other cash indices and just see what they're looking like, and try and decide whether we're likely to continue on up or whether we're likely to hit resistance and retrace this week. So starting on the Dow, monthly still looking bullish, not showing any real signs of resistance at all. When we come to the weekly chart, this is where we see some coming up. So we see some coming up around about 11,600. That means we've got around about 100 odd points on the Dow. Bit of a rally still possible before we hit any kind of resistance at all. That's not major, that level, but it's certainly been some quite precise touches there in the past. Again, that's a bit of a zone. It's kind of 11,600 up to around about here where we've had also some touches, so around about 11,750. So I'd say we've got 100 to 250 points run on the Dow before we run into any resistance. And the daily chart looking pretty good, not looking overbought at all. Coming to the S&P, see a similar type of situation here on the S&P. Monthly chart just looking bullish, breaking up through the highs, not showing any major resistance in the way. And when we come to the weekly chart, we'd have broken up through this area around 1220, and we've got now a 30 or 40 point run north, which kind of equates to around about that 250 point move on the Dow, doesn't it? Because we've got resistance here coming up about 1270 is the next zone where I'll be starting to expect us to find resistance. In the meantime though, that means that we've got room to run up to that level before looking to pull back. So far, looking at the Dow and the S&P, we're looking like stocks may well continue. Let's just wrap up with the Nasdaq before coming back to the TF. And coming to the Nasdaq, we have this one touch coming up. So this one touch here back in the 2007 highs. We're right up close to testing that. Even though it's just one touch, when we come and look at it on a weekly, we can see it again, it's just one touch. It's not anything major in that respect, but also it's a point of memory. People remember that, people are looking at that. So it's a point where people will have orders which creates support and resistance. In this case, it's likely to create some resistance. So that's not too far away. So there's a little bit of resistance coming up on the Nasdaq, but again, we have room for a bit of a run before we even get to that point. So coming back to the Russell and just wrapping up what I expect to happen this week, I am now expecting a continuation. I'm expecting this to continue. Last week I expected a bit of a pullback before a possible continuation and a retest of this upper level. Now we're retesting that and having a look at the major market, and the S&P is the broadest measure of the other three markets here we're assessing. I really think that based on that, having some room to move, and based on the Dow also having some room to move, that we're likely to break up through this level now and actually have a little bit of a run up this week in the lead up to Christmas. Overall, the markets are still looking very, very bullish on higher time frames, but I'm also very cautious at these levels. As bullish as I am in the longer term on all time frames, I'm also very aware that we are due a pullback. We've been running up for a long time. We've had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, so 14 weeks on the Russell with only one down week. That's quite significant. Only one red candle in the last 14 weeks. In fact, we could have made that 18 weeks and only 2 red candles. So we've got, we've moved a long way from the averages, and we're just due a bit of a pullback down, and I'll be looking for that to happen. It may be January, it may be this week, but it's just a case of things don't go up in a straight line forever. So always being very aware of when that pullback is due, and as we come up to resistance and we get overextended, we're due a pullback soon. But at the meantime, we've got to look at the charts and say, when are the charts telling us that pullback is likely to occur? And at the moment, the charts just continue to look very bullish indeed, and looking like they should be breaking up through those levels. Just one final update. This will be the last video for 2010. And the videos will resume on Monday the 10th of January, and you'll receive the emails again in your inbox. Videos will be uploaded then Monday the 10th of Jan. So I would like to wish you all a happy Christmas from Trade with Precision, and on behalf of ICE Futures as well. We hope you have a wonderful break and look forward to seeing you in the new year for a great 2011. Happy trading all, have a wonderful Christmas, and we look forward to speaking to you again next year.